Hello, everyone. I'm Jean-Claude at Beyond Mystic, and welcome to this week's edition of Beyond the Vault. With me today is the one and only, the man, the legend, the James Bond of the precious metals industry,
Haven't
Mr.
heard that for a
Andy
while.
Schectman. You can find his work, of course, at milesfranklin.com. Andy, welcome back to the show, and happy
Great
to
to
be
see
with
you,
you.
JC. I love being here. I hope you and yours had a great holiday season and a happy new year. I hope it's a happy, healthy one for you and everyone out there. It's going to be an interesting one, that's for sure.
I think so too. And thank you for being on. I'm glad to see you here. Also, we have a lot of things to talk about. We're supposed to do these weekly shows, and we kind of missed in the last 2 weeks with everything going on in the holiday seasons, of course. So we're back on track now, guys, on schedule. We are, although, filming this one on a Wednesday, but typically Andy and I are supposed to go Thursdays at 1 p.m. We just had a bit of a scheduling issue for this week. So starting next week, we should be back on track with our schedule. Welcome, everyone. We're triple casting today on Twitter, YouTube, and also here on Rumble. I'll try to take your comments and questions as we go along for today. We have quite a few topics to talk about here. So let me go through. I'll just present some of the screenshots and then we'll come back to the conversation here. So a couple of things we wanted to talk about here. No, we don't want to talk about midgets having sex with Stephen Hawkins. We're going to leave that one completely on the side there.
That was a curveball I didn't see coming.
Right. I know that was so weird. But yes, we are going to talk about the death of the dollar here. I'm going to talk about oil trade and what's happening now with the stoppage of the usage of the US dollar. We're going to talk about a whole slew of people here joining the BRICS in 2024, reaching perhaps critical mass, perhaps escape velocity, as Andy and I have been talking about for a couple of years now, actually.
Yeah.
We're here now, interestingly enough. I do want to go and talk about this catastrophic jobs report also that was just presented. And finally, we want to talk about gold, silver, where all of this is going in 2024. Quite a few articles have been posted on this already, a lot of ink suggesting that 2024 might be a critical year here for gold and silver. And on top of Costco selling gold and silver, Walmart now entering the fray. So there's a lot there. We want to talk about the recession, of course. CNN says, don't worry, it's probably avoided. We'll get back to that here a little bit later in the show. And then we'll talk about the CBDCs here in Canada, the government doing exactly the contrary of what they've been telling Canadians here for a number of years by now filing trademark patents here on their digital dollar program, as well as what Christine Lagarde is all about here, suggesting that we need to push for CBDC because the central banks are losing relevancy in this crazy, crazy world of ours. So let's start here, man. First of all, you've been following the news the last couple of weeks. I've seen you doing amazing interviews here, including the one with Michael Flynn. That was absolutely cool. Andy,
Thank you.
what are some of the things that you're tracking right now this week, January 8, 9, 10? What are you seeing in the news that suggests that, or that you want us to focus on here for the interview today, Andy?
Well, yeah, I mean, my main topic of interest for the last 3 years has been de-dollarization, the growing union of all of these countries that have joined together. And I think since we've spoken, of course, we have now the 5 countries that have been formally admitted into BRICS, being Egypt and Iran and United Arab Emirates and Ethiopia. And who am I missing? Iran, Ethiopia, United Arab Emirates, Saudi Arabia. How could I miss Saudi Arabia? It's a big deal. We've talked a lot about that. And it's a trend that is not stopping. There's 30 other countries that have formally applied, another 20 that have informally applied. You're talking the majority of human population. You're talking much larger military might, 2 of the 3 largest nuclear arsenals on the planet. You're talking the majority of all the resources and a good portion of all the shipping and transport lanes throughout the world. You're talking a growing union of countries that is becoming very, very legitimate. And I think that's, to me, really where things start. We're seeing all of these countries trade in their local currencies. And, there was a lot of people who pushed back against the BRICS when they saw that there wasn't a common settlement currency issued in August in Johannesburg.
Right.
There's talk that this will happen in October in Russia. There's 200 meetings between now and then, all related to the BRICS in Russia over the next year, as this union grows with legitimacy and with size, critical mass, if you will. the finance ministers were all tasked with going back to the drawing board and finding out indeed what it would take to issue a common settlement currency. Now, you notice I'm not saying reserve currency, not just yet. The bond market would be stage 2. But what I will tell you is that I do believe that a lot of these countries are accumulating gold and shedding treasuries. And when we get to start talking about gold, I'll show you why that is or how that is bearing out. But indeed, I think what we are witnessing is a trend in motion that is gaining speed. And in the meantime, all of these countries, China is encouraging all the Gulf nations like Saudi Arabia, the UAE, Qatar, Kuwait, Bahrain, Oman, all of them to utilize the Shanghai Petroleum and Natural Gas Exchange and to settle all of these energy trades in local currencies, in yuan or in any of the currencies that these countries want to exchange them in, as long as they are not in dollars. And I think that is really, to me, the central focus of what I will be watching all of 2024. And certainly we can talk about that right now. That story right there is the biggest of all. I've made, I think, for 3.5 years, I've done almost 1,500 podcasts on this. Long before anyone was talking about it, I said Saudi Arabia will join the BRICS, and lo and behold, they did. But it started out when I realized that every one of the OPEC countries are on the Belt Road Initiative, which is the largest infrastructure project in human history. It's the old Silk Road. You're talking 75% of human population right now, over 50% of global GDP, just on the Belt Road. But what really keyed me into it being concerning was that every single one of the OPEC countries are there. Now, they're not there coincidentally. You're even talking the ones that are in South America. And so it is not coincidental. It's fair to note that Brazil just applied for OPEC as well, of course, one of the charter members of the BRICS. But throughout the last 2 years, I've made big deals about several things. One, all OPEC countries on the Belt Road. Two, the fact that they have applied, that being Saudi Arabia, to BRICS and now have been formally accepted. Three, the fact that they've applied along with Iran, who has been formally accepted. Saudi Arabia is in the stage where it's just prior to being a full-fledged member. I think it's called like an observer or something along those lines, but with the Shanghai Cooperation Organization. And this is the largest regional financial and military organization on the planet. Now, I've been saying for at least 2 years that the SCO, the Shanghai Cooperation Organization, and the Eurasian Economic Union would join together with BRICS. They will. That's one of the things Jim Rickards talked about last year, but I've been saying it for 2 years because they're all the same countries. And the president of Belarus has just called for a summit for that indeed to happen. You are seeing this union grow in credibility, size, scope, military might, etc. I made even a bigger deal when they joined the BRICS New Development Bank, this all being Saudi Arabia. And then when they went and told the world at the World Bank meeting that, hey, we're open to taking other currencies for oil, that was really something that caught my attention, because for the last 50 years, the dollar hegemony, the petrodollar, has made it so that virtually 100% of all oil sold around the globe was denominated indeed in dollars. Well, lo and behold, we find out.
And that statement would have been declared an act of war, really.
Well, you could argue that. Yeah. And then when we see that 20% of all oil sales have settled outside the dollar in 2023, it becomes a little more provocative. But none of it is as provocative as what the United Arab Emirates just did. Now, the UAE is the 7th largest producer of oil in the world. They are an OPEC member, and were just admitted to BRICS right alongside of Saudi Arabia. And they just had 200 delegates from countries around the world in Dubai for the United Nations meeting on climate control and climate change. And ironically enough, it was presided over by the chairman of the UAE state-owned oil company, where he told the president of Ireland, hey, I'm just saying, if we do this, if we go green, you will send everyone back to the caves. Tells you where their head is. But what's really interesting and really didn't get a lot of attention in the West, I wonder why, is the admission by the UAE that they will no longer take dollars for oil. Now, that is a huge shot across the bow. Now, it's not as big as Saudi Arabia and the rest of or OPEC saying this, but certainly when you look at Russia and Iran and now the UAE, 3 members of BRICS no longer accepting dollars for oil, the inevitability, I think, is something to to bank on. But one of the stories that really also wasn't picked up was that right after 200 members, 200 delegates from countries around the world leave Dubai, the day after that, an impromptu trip was made by President Putin, who hasn't left the country but for once or twice in the last 2 years because of the Western bounty on his head. And he was flanked by 4 MiG fighter jets where he made an impromptu trip to the UAE. I wonder what he had to say. Do you think it was, we've got your back because what had happened to Gaddafi and Hussein? Who knows what it was? But from there, he went to Saudi Arabia, where the next day, OPEC announces a 2 million barrel reduction in oil output from 1 million. So what I'm getting at is that you can see the wheels are spinning faster and faster and faster and faster. And an admission by an OPEC member, the 7th largest producer of oil in the world, who's been Western friendly and has now joined the BRICS. If people don't see this as becoming more and more and more legitimate, I call it logarithmic decay. Little by little by little by little by little, then bang, all at once. We're not there yet, but the little by little are axe swings at the hegemony of the dollar. And all of these trades that used to settle in dollars aren't anymore. And what does 2024 look like? I guess we'll see. But if it's like 2023, you can expect more of these countries to come out and find safety in numbers and say, hey, you know, you guys signed an executive order to go green. We respect that, but we're going to side with the majority of human population who's not. And by the way, we have quite a military might backing us too. So just saying, and I think that's what you'll see in 2024.
Do you think, well, first, thank you for that. And just listening to you now, and I could have put up all the reference materials you guys, we've talked about this before, but you guys can go and do your own research. It appears to me that these are tectonic shifts in global power structures and financial systems. Yet here, at least in the West, we're really not looking at it in the mainstream news. We're not talking about it. And if you bring this up to your friends on the golf course or at the restaurant, their eyes kind of glaze over. I'm like, it's a nothing burger, JC.
Yeah.
And then Yellen told us the dollar's going to be strong for the foreseeable future. It's kind of like, it's a little bit surreal because I feel like, well, there's a cognitive dissonance load, but it feels like we're being gaslit by our own governance systems here. And I wonder why. And I wanted to bring up, we didn't talk about this before the show, like if all of this is happening behind the scene in our power structures, the people who we elect to office to protect our interests, okay, and I'm a bit naive in saying that, I hear myself speak that out. If they're not warning us about these tectonic shifts that are taking place around the world, is that part and parcel what we see here in this documentary, The Great Taking? First of all, your take on this documentary, and how does that tie in perhaps into some of the movements that we might see here in 2024, Andy?
Yeah, I think that even The Great Taking has not gotten anywhere near the press it should have. First of all, as far as the Western media, the reason so few people are in the dark, or so few people understand, and most are in the dark, is that the media does a horrible job of showing us what's really going on around the world. But whether you're talking even something before I mentioned my feelings on David's book, you have the fact that you have bank bail-ins that no one understands what it is, that it was written into law in 2009 in the DoddFrank Act that we are considered unsecured general creditors of the bank when we deposit money into the bank, and that when a bank fails, the unsecured general creditors are the ones that basically bear the burden of making the bank whole by bailing in. And what happened with Silicon Valley Bank and Signature Bank was illegal. And that's why there was outrage by the House and the inquiry with Janet Yellen. And she said, it was an uber majority decision. We had to do it or the whole thing would have imploded. And then the other 3 or 4 banks that failed were gobbled up by either JP Morgan or regional banks. People are in the dark. And I believe there will be a bank failure that will trigger a bank bail-in where everything over the FDIC limit, which, by the way, they have 3 to 5 years to make you whole, not right away. 3 to 5 years to make you whole and pay you the FDIC limit if a bank is bailed in. It's catastrophic. And I don't think people understand that. You could have a business account with $5 million in operating capital and bang, it's gone. Anything over $250,000 is gone. Google bail-ins, DoddFrank Act. Do yourself a favor, understand it. Tell your friends and family about it. because it's
Can I
real.
just add to the Dodd-Frank Act here too in Canada? This is one of the law firms here, Macmillan, reporting on this. This was the budget in 2016, introducing bail-in regimes here across Canada and across these 6 domestic major banks here. So go do your research; it's all there in black and white. I was even
Yeah.
surprised to see this here in Canada, but it was a continuation of what had already started to be put in place in 2011, 12, 13, as Andy was just saying here across the world. So this is pretty much now ubiquitous across the board, and it ties into that great taking scenario here in the documentary. Eddie, keep going.
Yeah, and as far as the great taking, so all of the securities and I think most, if not all of the treasuries that are sold in this country through a brokerage are held at a central clearing agency. I think it's called the DTCC.
Mm.
And the way they changed the law, it's called the Uniform Commercial Code. They converted assets or asset ownership into a security entitlement. And the entitlement designation made personal property a contractual claim, right? You don't own it, but you have a claim on it. It's the entitled person. The entitled person is a beneficial owner, but not the legal one. Kind of like an IRA, where the IRA custodian is the legal owner and you are the beneficial owner. And in the event that a financial institution is insolvent, the legal owner is the entity that controls the security interest. In essence, the client's assets belong to the banks. So, and this was upheld during the Lehman Brothers failure, and it was challenged in court where J.P. Morgan was the legal owner. In essence, the what do we call it? The beneficial owner. Or excuse me, the legal owner and the beneficial owner were clients who had it through other entities. And well, sorry, you lose. That's the way it goes. So in essence, what this book basically says is that everything that is a security does not belong to you. You are not the legal owner. No one owns stocks physically anymore or bearer bonds anymore. It's all held at this clearing agency where they will use them to lend out, to short, or to do other things with other entities, other clients. And if there is a problem, well, you're the beneficial owner when times are good, but when times are bad, you are not the legal owner and you will lose everything. And in essence, that's what it's saying. But the scariest part of this book was that it was challenged and was upheld and that it is law. So when you talk about the things that are important and relevant, like bail-ins, like the fact that the Uniform Code changed from legal owner to beneficial owner entitlement, and what would happen in that event is terrifying. Right. And the common denominator with all of this is that if interest rates were to spike to the moon for whatever reason, maybe, you got right now the Speaker of the House and basically the whole Senate working on a deal to not only we have sanctioned the Russian assets, I don't know, $300+ billion, and we froze them. Day one, we froze them. No interest paid. You can't touch them, but they're still yours. Kind of like what's happening with Iran right now, where they're getting their money back. We never confiscated it. They are working on a plan to confiscate it and to use it to fund the war in the Ukraine because Congress doesn't want to give them more appropriations. So you do that, you've crossed the line. You steal another country's treasuries, you have crossed the line. No one will ever trust us ever again. So if the world dumps dollars, namely OPEC, and the fact that we're not going to take dollars anymore for all of these reasons, like the UAE, the Iran, and Russia, we're going a different direction. Bang, everyone in the world dumps dollars, and you have interest rates that spike to the moon to compensate for that inflation as all those dollars hit our shore. And what would crash? Well, stocks, they're inversely correlated. Well, bonds, they're inversely correlated. Well, the real estate market, that's inversely correlated. The banks, they're in big trouble when rates spike and the dollar gets clobbered. You have literally the great reset where all 5 pillars of wealth, stocks, bonds, real estate, the dollar, and everything around it, the banks collapse. So it's a very scary situation, one that we would like to hope never happens. But ask yourself, why the hell were these things put into place? And if these things do happen, you don't have it, like Bick says, you don't have it in your possession. Well, arguably, especially when we're talking securities, you don't own it.
If you don't hold it, you don't own it. Speaking of the banks, so this is the Great Taking. I have the book also here. I watched a documentary and I'm into the book now. On chapter 8, they're talking about these bank holidays. Speak about that too. I mean, we've seen this across the world happening. We've seen that in the United States. People have a short memory. They think this can't happen. Although, if you look at the deposit outflows in the last year, that continued to accelerate since you and I did the banking crisis series in March or April of 2023, those problems seems to have just exacerbated. And there's also a saying in Taoist terms, energy betrays intent. So if they're putting all of these energies into modifying these laws to perhaps get into this great taking, it betrays the intent of somebody, of a bigger force here. Whether they're successful or not into it, we can debate that all day. But the intent appears to be there based on the energy and the amounts of energy they've put into all of this legislation across the world. So talk about the banking system now, what you've seen in the last number of weeks, not just the repo market, the reverse repo market, the liquidity issues, and the continuations of the deposit outflows since March of 2023. Andy.
Yeah, all the money that, you've seen over $1 trillion leave the banks and in search of return going into the money market accounts. And what's even more concerning is you see lots of money leaving the commercial banks too, going directly to the Treasury, because the yield of the Treasury has been higher than the reverse repo market, where the money markets park their funds. And that's why you see the reverse repo market draining, all in search of higher yield, all making the banks that are already way over leveraged and undercapitalized even more undercapitalized. And which brings me to this you can't make it up thing, and that's this bank bailout funding program, right? And it's $7 billion was added last week to a high of 143 or 100 up to near $150 billion.
Right.
And what's really interesting about this, now, first of all, it's supposed to sunset in March. It will be done. And so this vehicle that the Fed has used to inject and reliquefy the banks, which I'm about to explain, is over. And all of the banks that have borrowed money, pledging collateral, have to pay everything back by March. But what's really screwed up, and I guess you could basically say that this does not reflect normal market operations. I think it's a sign that the bank funding markets are very sick and certainly aren't operating properly. And that is this. Right now, the banks can take and pledge collateral at par value. So in other words, they have treasuries that are way underwater that they can give to them and get at face value, right? And the Fed will take it and they'll give them a loan against those. And that loan right now is at 4.83%. So they say, thank you very much. They get cash. They're borrowing at 4.83%. They're pledging collateral, the treasuries. But then they take that money and instead of putting it back into the system, they're going right back to the Fed, to a different door, and getting 5.4% by parking their money at the Fed. So they're borrowing from the Fed at 4.83%, walking out of the building and walking right back in another door and receiving 5.4% for parking it there. Does that make any sense at all? Makes absolutely no sense to me. But the bottom line is, yes, the banking system is a complete and total utter mess. You have, depending upon who you talk to, between $700 billion and $1 trillion in unrealized losses. You have over $7 trillion in uninsured deposits. And it's a situation where, look, inflation is not going away. And I believe that they're going to talk about lowering short-term rates, but at some point, I think the markets will say, no. There was just another treasury auction, I think today, where there was a big tail. We've been seeing all of these treasury auctions where you have a tail, means you have to keep ratcheting up the rate on any of these bonds with any duration whatsoever, 2-year, 5-year, 10-year, 30-year, whatever, because no one wants them at the rates they come out with. Well, I think when you look at the fact that China and Russia and Saudi Arabia and all of these countries are shedding bonds and buying gold, right? Who's buying all the bonds? That's us. That's the hedge funds. That's the people chasing yields right now. But there will come a point, I believe, where these big institutional buyers of treasuries will demand, because the countries aren't doing it. So if the institutional buyers have to pick up the slack, they will demand a much higher yield in order to compensate for default risk, for inflation risk, and for outright raising of rates risk, which is going to happen naturally by market force, where the Fed is not as powerful as the market when the whole market is moving in a different direction. And And I think that's a deal that people don't quite get yet. And I think that you will see rising rates, which will put more trouble on the banks. It will put more trouble on the 115 or so, I think, $1 billion in commercial real estate loans and leases that have to be reset here in 2024. So, yeah, I think leaving your money in the bank right now, anything over the FDIC limit, which, by the way, they only have 128 billion in assets backing 18 trillion in deposits, is going to be something that people look at very differently if we see one bank bail-in, which could immediately create just a catastrophe. But I think you will see higher rates and inflation here to stay. I don't care what the talk is of lowering rates. The Fed has done nothing but lie to us. In 2008, when Bernanke said, subprime market problem is contained. A few days later, it blew up.
Contained.
Right, and look at how wrong they've been about inflation. And
don't worry, we'll normalize our balance sheet. Don't worry, it won't take too long.
Right, right, and that's the point. So when they tell you we're going to lower rates, look, the bond market thinks they're going to, but when we lower rates, after all of the things we've done to screw things up around the world, and we haven't even talked about what's happening here at home, I think that, it signals to the rest of the world, what do we want your debt for? Why would anyone lend money to the U.S. government for any length of duration? Yeah, I think that's going to be a problem that they're facing, and they can say all they want about pivoting and lowering rates quarter basis point at a time. Ultimately, the market, I think, will prove that it has greater influence than the Fed does.
I think 2024, honestly, if I had to put one word to it to describe what's coming, I would say capitulations. Even though the Fed is telling us we're going to have 3 rate reductions in 2024, as you're saying here, that's the talk. Indications here of what's happening in the rest of the world putting pressure on that might change that very quickly. We have some breaking news here as we're doing the live show. The SEC just approved the spot Bitcoin ETF for real this time, because yesterday there was a leak and they said no, it's not true, we haven't approved it yet. So now that's mainstream news. Perhaps we'll get back to that at the end of the show, but I wanted to you just mentioned here what's happening here at home. So the catastrophic job report here, this was just posted on January 5, suggesting that things are not right and that the Bureau of Lies and Statistics, the BLS, is again lying to the public here all year. Here on CNN, they're talking about this recession being avoided, although on BNN they're saying, fear of recessions, inflation are the top concerns of global CEOs. People who are paying attention about this are not so rosy about the outcome of 2024. Put that in the context here with this discussion, what's happening on the global scene, but really what's happening here in North America. We seem to be, for all intents and purposes, if they hadn't redefined the word definition here in the last year or two, we've already been in a recession, and things are going from worse to worse here on a daily basis. Andy.
Right. Well, look, they lie continuously. The BLS, you should take the L out of the acronym and should just be BS. So look, if indeed they do pivot and resume rate cutting, they're going to set off the money printing inflation machine again, and it's going to get nuts, right? So, but the way that they measure inflation is flawed. We've talked at length about John Williams' shadow stats, where he just uses the metrics that they used to be at. The 1980 metric would have inflation, if used the same way, at over 10% right now, not what they want you to believe. And when you talk about the employment numbers, look, I don't know how many people caught it, because the way that, and let's keep in mind that the Fed is supposedly making decisions based off 2 things, full employment and inflation, right? So we know they're lying on inflation. Well, how about employment? They've been telling us what a great labor market it is. Yeah, you have people working 2 and 3 jobs right now. You can go to the St. Louis Federal Reserve and see people working more than 1 job or a second part-time job. It's off the chart. But get this, I would argue that the payroll data that we get is ridiculously flawed, and we are lied to ridiculously, because they just came out and had a downward revision for all of 2023 on those jobs, that they use this stupid fairy tale birth death rate model to figure some people die, some people get born, and I don't even know how the hell it works. But what they came back and told us was that, oh yeah, by the way, we overestimated by 443,000 jobs, or 40% of the payroll growth in 2023. Oops, we're sorry, it was wrong. So this is what I mean. Yeah. We're being lied to for a reason, and that's the problem. people can't get out of the way of what they don't see coming. It's like walking blindfolded across a busy intersection. You're not going to know what's going to hit you. And so few people understand what's happening because we're being lied to. The media doesn't do a good job of showing us what's happening. And there's recency bias and normalcy bias. But the rest of the world, I think, looks at things in a very, very different way. And when you talk about, what made this country great, many of those things are going by the wayside. Lady Liberty wearing a blindfold, holding the scales of justice. Is justice being applied equally? I don't think people would think so. Our open borders, the 10 million people here illegally, who's going to pay for all of these, the medical, the schooling, the housing, and the competition for jobs will make the wages go down for tax-paying Americans. And how about the fact that blue and red can't speak to each other anymore? And how about our elections? Are they legit? I mean, all of these things that made this country great, let alone the woke stuff that's happening. I won't even talk about that, but I think people look at this country and say, geez, what the hell's going on with the United States? This isn't the country that I remember. Right. And then you look at our finances, which are a complete and total mess. We're at almost exactly at 130% of debt to GDP, which no country has ever crossed that line and not defaulted outright or hyperinflated ever in history. We're right there, like 128% of debt to GDP, if we believe the metrics.
Well, the numbers. So it's false reporting, yeah.
Right. Yeah. So, I think that it's time for people to understand that gold and silver are not an investment, they're wealth. And this is why we've seen the central banks for 2 years running buy more gold than at any time in central bank history. They know the playbook. Mm-hmm. They're the wealthiest and most well-informed traders. And there's something behind that.
Yeah. Central banks bought a net of 44 ton of gold in November. Again, are the numbers out for December? Did you see them already?
I have not seen them for December, but I do know they were for China, who bought for the 14th month in a row in December, and they're leading the charge. Alistair McLeod, one of the greatest minds in this industry, believes they have as much as 38,000 metric tons in China, 18 by the people, 20 by the state. That would be over 5 times what we supposedly have at Fort Knox, which hasn't been audited in over 50 years. So,
right.
Yeah, I mean, the rest of the world is on a gold accumulation spree, and they are using the suppression of the Western paper markets to achieve their goal of ultimate de-dollarization and of robbing all of the metals out of the coffer. If you look at what's happening in Shanghai right now, JC, they have silver priced at over $2.50 higher than it is in the West on the LBMA or on Comex, and gold anywhere between $60 and $120 an ounce higher. So they are slowly turning up the heat. They're like, let's slowly arbitrage. We will incentivize the traders to arbitrage all the metal to us. We'll pay more in dollars for it. Those dollars are losing value anyway. And let's just buy up all the gold and silver that we can entice these traders to release. And it's a growing trend that I think we will see. But look, when we talk about gold, there are a lot of things that people don't really get about gold. And I think you need to understand it's the tortoise, not the hare. You mentioned the Bitcoin ETF. What is Bitcoin? Bitcoin is an asset. Let's not say what is it. How is it performed? It's made people and cryptos in general look at assets and how they perform in a way that in everything I've ever learned in over 30 years in business is not true. Things don't move where you double, triple, quadruple in a short period of time. And when you realize that for the last several years, the suppression of interest rates and the deluge of money poured into the system has created lots of distortions in asset prices. Well, the one thing about gold and silver, why they don't go higher the way these things do, is the vested interest of the West in muting them, because they are really the antithesis of the system. They show the fragility of the system. But when you see the most sophisticated and well-informed traders on the planet make such an effort to hold the price down and yet accumulate the crap out of the physical, it becomes more intriguing. And when we look at its performance, I would argue it's the tortoise that wins, not the hare. Since the beginning of the century, gold has outpaced everything. Since 2000, gold has performed to a rate of 7.8% annual return. The S&P 500, 7%. It's destroyed the bond market. And when people look over the last few years and say, yeah, gold should be a whole hell of a lot higher with all of this stuff happening, I don't disagree. And it ultimately will. But check this out. In 2020, gold was $1773 average price. 2021, 1798 average price. 2022, 1801 average price. 2023, 1943 average price. You slowly turn up the heat and the frog dies. You dump it in a pot of boiling water and it jumps right out. So all of these central banks who have been using the suppression of the Western pickpocket the world, yes, it's slowly moving up. And yes, they're buying more than they ever have, but you have to do it in this fashion, methodically, inject volatility and counterintuitive price action and rhetoric that keeps people looking elsewhere, like Bitcoin, like stocks and bonds. And lo and behold, gold continues to march higher and has outpaced everything, maybe with the exception of Bitcoin, since the year 2000.
So you mentioned the manipulation being a big part in that, the muting, as you just called it, but there's also a physical aspect to gold and silver, which we don't see in Bitcoin. Although one would say that, yes, there's a finite number of Bitcoin and they are mined. Now we're seeing these electronic traded funds, which kind of remove the underlying physical part of it, of the Bitcoin and cryptocurrencies. So that's perhaps why there's a big discrepancy here in the trading numbers.
Well, look at GLD and SLV. These are proxies that are supposed to be 1-to-1 for every share. It's supposed to have an allocation of gold or silver held in a vault. They allow naked shorting. Yeah. Huge naked shorting by the big funds. Yeah. And if you have enough money to short the hell out of the price of GLD or SLV, literally you can help control the paper price. And that's, I would argue, certainly it could be very bullish, obviously, as you have all this money going into it, but it also gives the ability by, the same group that has been suppressing the price of gold and silver, using the ETFs to do so, not just the COMEX. Look at the massive naked short position on SLV, and you ask yourself, who the hell would do this? Why do you naked short that? Mm-hmm. And, I would think that it kind of, and again, I'm not the Bitcoin guy that can speak with authority on this, but just off the top of my head, it seems like it would kind of alter the purity of Bitcoin.
Well, I've argued this already since we started talking about these electronically traded funds here in crypto, that yes, on one hand, it could be good for the market because we would see more institutional money come into the fore, but at the same time, so too would be the pressures of manipulation and naked shorting and all that stuff. So I'm going to do another Beyond Crypto Woo roundtable very soon. I see Lyco and Lisa in the chat there. Also, Lisa, I'll invite you back on the show here to talk about this Bitcoin ETF.
Hi, Lisa.
I wanted to bring up a comment on the live chat here. Midday Sun says, love Andy Schectman, fabulous family-owned business, very honorable and respectful people who work extremely hard and diligently to serve their clients. My favorite is Richard and Miles Franklin. Well, thank you for that, Midday Sun. I agree with you. The guys at Miles Franklin do an amazing job with the clientele here also at Beyond Mystic. And I wanted to get into this here too, because now we're seeing, in terms of the recession, we're seeing CEOs around the world not only realize that there's dangers ahead, but I think we're seeing people more and more realizing here too that things are shifting, and they might want to get into perhaps where this volatility is going to go in gold and silver as perhaps a safe haven for everything else that's happening around the world. So now we're seeing, we saw it in Costco last year, huge numbers, and now we're seeing Walmart enter the fray here, selling gold and silver bars. Now, when I look at these prices, they're a lot higher than yours in terms of the premiums. This is a big box store, and one has to wonder also who's behind this, why they're behind this. Do you have any take right now? Other than, okay, let's talk about that right now. What's behind?
Well, first of all, it's kind of misreporting by Zero Hedge, which is one of my favorite sources of news, and I would not disparage them at all. If I tell people I have one go-to source, at least on a daily basis, I've just got to see what's happening. That would be at the top of my list, Zero Hedge. But Walmart has been selling gold for longer than Costco. They've been doing it for a few years now. And they're basically just, it's AppMex that is just basically moving their website, their portal, all of their information to the Walmart website. And they don't hold it. As far as I know, it's being shipped by AppMex. And it's a stroke of genius for sure. I like to tell you, I would have been the one that figured that one out. But I'll tell you that, they are higher prices because I think they probably don't sell very many. I was involved once with a crypto-backed, it's a blockchain-based gold program held at the Royal Canadian Mint. And one of the things that I found interesting, in fact, it's basically one gold that APMEX sells, and it's the same platform. And we were involved at the very, very beginning of it. We actually did the Genesis trade on this platform, and the company that was behind it, their name was Tradewinds. They're the ones who developed the technology. They're out of business now, but one of the salesmen who recruited companies like mine became a friend of mine. We spent a lot of time together in developing this program, both from an intellectual standpoint and also from actual nuts and bolts of building building out the blockchain and how it would speak to gold companies like mine and whatnot, and at the Royal Canadian Mint. And one night he told me, which I found very intriguing, that a lot of the online companies, the majority of all the business that they do is small orders under $2,000, lots and lots and lots and lots and lots of them.
Right.
We're kind of the opposite of that. We will do those orders, but we've been more of a kind of a hybrid model where we do more of a client interface. And so although we're happy to do that, we have traditionally not been an online company. And so what you're seeing there is the same thing carrying over, I think, with kind of the prejudice that the people who would buy it at Walmart are not going to be making very, very large trades. And so it's basically related to a lot of the companies out there employ what's called economies of scale, where, right, I try not to do that. I try to give like when you go buy a car and the guy has to go back to the manager 17 times to get you the right price. How about just give me the right price to begin with? Well, right, when you talk economies of scale, a lot of these online companies will say, you buy up to a certain amount, you pay this, you buy more, you pay that. Now, we do have something like that on our website where we allow up to $10,000. But if you call us or you send us an email at info@milesfranklin.com, you talk to one of my brokers, or you request the price sheet it's much more competitive than it's a one price deal that we don't have on our website. Yeah. You're going to get a better price, and we don't do that. But it's very common in this industry where smaller trades command higher markups for the, I guess the implication is that it takes the same amount of man hours to box it and package it and do all of those things as it does if it were 100 times that size. So
for sure,
the prices aren't that great, but they've been doing this, to my recollection, for at least a couple of years through APMEX. I think when Costco jumped on the scene, it just caught the attention of others, and look, Walmart's doing it too. But actually, they were first to the game, I think.
Yeah, you might be right about the misreporting on Zero Hedge. I think what they were getting into was that maybe Walmart was getting into it in a much bigger way to maybe try to get the same volumes as Costco is doing here through this new deal with APMEX. Yeah. Let's talk about some of these special you have here on the beyondmystic.net/silver page here. These are the discounts given to the Beyond Mystic audience here today. What do we have here? And what's that middle coin there with Trump's face on it?
Yeah,
a lot of people have been asking for that for a long time, Andy. How'd you get those?
I don't know how we got them. We got about 8,000 or 10,000 of them, not a lot. Okay. But the truth of the matter is, and like the Noah's Ark coins, I mean, there are other coins that are even priced better than those. And the truth is, everything is on sale, and it will go down as a great mystery to me, where so many people have really no understanding of what's happening. And at the same time that gold hit all-time highs on the LBMA a week ago, hit 2 weeks ago, hit all-time highs on GLD, and the central banks are buying more than at any time in history. The retail public, again, because they're not getting the right information, is asleep at the switch. And when you throw in the 2024 allocations, where companies like mine need to spend tens and tens and tens of millions of dollars on buying all the 2024 allocations to stay in the good graces of the mints and the mines and the distributors, or the mints and the refineries, rather, and the distributors, that if you don't do that, you kind of slip back in priority. When you already have what has been, I think, the lowest premium and best availability we've seen in 4 years leading up to this, it doesn't make sense to me that, as a father, JC, I'm more concerned about the world I see around me than I ever have been, including the last 3 years combined. And yet the premium and the price and the availability of metals right now is is as good as it's been in a very, very, very long time with immediate delivery. And of course, that can change if something happens that makes it change. But everything is on sale right now. Literally everything, in my opinion, is on sale, especially in comparison to where they've been for the last 3 or 4 years. So the best way for your people to reach us, to get white glove service, to get the best pricing, and to make damn sure that we treat your clients as good as humanly possible, is to send us an email at info@milesfranklin, say JC sent me, and you have my word that we will go out of our way to do that. Look, we make mistakes. Everyone does. But if we do, we'll make it right. I can promise you that 100%.
Somebody says here, yeah, Miles Franklin's people are top notch. I agree with that too. Yes. If you want a bit of an ease of communication also, and you want to select some of these specials that are here available to you guys now, including this Trump coin, you can find that at beyondmystic.net/silver. Just fill out the form there. And again, get Andy and his boys here to send you the list of the current products.
I'm sorry, I forgot you do it that way. That's the best way to do it for your listeners.
No problem.
Please do what JC just said. That is the best way for sure. And we will make sure that you guys get white glove service. I promise that.
I appreciate that. Andy, we're already at the 45-minute mark. There was a few people having confusion in the chat, suggesting that perhaps those were wine racks behind you. I'm like, no, it's the it's the vault room. These are all how do you call them? Safety deposit boxes on each side of the vault. I think they might have been joking because they said, oh, Jean-Claude's France is probably wine. Somebody else was saying it was a coin collector thing. I'm like, no. They're just safety deposit boxes. They're from the poster in the background. Andy, last words of wisdom before you go. Anything else you wanted to share with the audience here before we started the show here today that you thought that we needed to talk about? Did we hit all the points? And if there is anything,
I think we hit all the points. I mean, a year of change. I think this is a year where the world starts to push back against the mismanagement of inflation, of the currency, of all of the wars that are going on that we're involved with. And I just think that you can only push people so far, and you can only push the rest of the world so far before they start to push back. And pay close attention to what's happening with the BRICS. That's really what I would say, because that's where really night and day change will come from. And if we continue to see a growing union of credibility and of size, I would expect by the meeting in October, where many people believe they will issue a commodity-backed settlement currency. We've been told that for a long time now that it's coming. Yeah. Things will get very, very interesting very, very fast. But no, I think we definitely covered the majority of the talking points, and I'll look forward to coming back next week with a whole bunch more to talk about. That's for sure.
Awesome. I'm excited to have you back on next week. In the meantime, I want to read this comment from John. He says, this is the most educational, practical education channel on YouTube. Well, thank you for that. And he says, Andy is just the icing on the cake. I agree with that one.
I appreciate that very much. And I know you do the same, JC. It's hard to study continuously, to search for more information. I'm reading websites from all around the world and doing all I can to keep up on what's happening. And I will look forward to riding shotgun with you, JC, on this, and what I think will be a crazy, crazy, crazy year. And I'm sure there'll be lots to talk about as time goes on, and I'll be on top of it.
All right, for sure. Thank you so much, everyone, for joining us. Thank you, Andy, for your time today. Of course, this was the Beyond the Vault edition here for January 10th. And please do join us later this evening at beyondmystic.net for this Beyond the News edition. This is going to be at 8 o'clock. We're looking at the Epstein fallout decode that all of you have been asking, including those crazy tunnels that are surfacing in New York City right now. So see you again at 8 o'clock Eastern this evening. Thank you so much, everyone, for joining. I'm Jean-Claude.
Bye, everyone. Bye, Lisa.
Take care, guys.